This is Business Report Africa on your digital first Pan-African news network, TOS TV. Now the headlines. Afreximbank disburses $250 million to TNOG to acquire 45% stake in oil lease. Nigerian banks issued 774.28 billion naira new loans in December 2020. And thousands of restaurants face closure in South Africa. Naira gains at black market external reserves improve on higher oil prices. And gold suffers its worst January performance since 2011 amid rising US dollar. DF Holdings acquire additional 27.17 million units of AIICO shares worth about 13 million naira. And details after the break. We begin with business news. Afreximbank has announced the disbursement of $250 million support to TNOG to acquire a 45% stake in OML 17. The African Export-Import Bank has announced the disbursement of $250 million as part of its support for Trans-Niger Oil and Gas Limited to acquire 45% stake in oil mining lease OML 17 onshore oil field. The fund is part of the $1.1 billion which is required by the oil firm for the acquisition of the 45% stake in the oil field in which the Nigerian National Petroleum Corporation (NNPC) holds about 55% equity in the lease. Now, according to a press statement from Afreximbank, the $250 million reserve-based lending facility is the largest amount to be disbursed for this purpose, underwriting about a quarter of the financing that enabled TNOG to acquire stakes in OML 17 from Shell Petroleum Development Company, Total E&P Nigeria Limited, and ENI. The statement noted that other participating lenders in the consortium, including African Finance Corporation, Union Bank, Shell, Hybrid Capital, and Scumberger, were TNOG advised by United Capital PLC. Now, other participating lenders are Africa Finance Corporation, Union Bank, Shell, Hybrid Capital, and Scumberger, with United Capital PLC advising TNOG. TNOG is a related company of Heirs Holdings Limited and Transnational Corporation of Nigeria PLC, a leading Africa conglomerate with interest in banking, insurance, real estate, hospitality, and power. Afreximbank in a statement said the 5-year $1.1 billion facility, which was signed in December 2020 despite the economic headwinds caused by the COVID-19 pandemic, was led as mandated by lead arrangers by Afreximbank, Standard Chartered Bank, and ABSA. Now, following this acquisition, TNOG will now operate the OML 17 onshore oil field on behalf of the Nigerian National Petroleum Corporation, which owns the remaining 55% working interest, the statement added. Professor Benedict Orama, in his statement, said this transaction further underscores Afreximbank's commitment to ensuring that indigenous African companies are able to play a more dominant role in the operations of specialized oil and gas assets in an industry hitherto dominated by the international oil companies. Now, TNOG, as the operator of OML 17, will invest in an accelerated production ramp, thereby boosting foreign exchange earnings and employing more Africans. This resonates with our mandate, and we congratulate Heirs Holdings for keeping the African flag flying. Now, Nigerian banks issued 774.28 billion naira new loans in December 2020. Banking sector credit grew up to about 25.02 trillion naira as at December 2020. Nigerian banks increased their total loans to the Nigerian economy by 774.28 billion naira in December. This is according to the information contained contained in the monetary policy communique issued by the Central Bank of Nigeria on Tuesday, 26 January 2021. The Central Bank of Nigeria stated that the banking sector gas credit grew from about 24.25 trillion naira as of November 2020 to 25.02 trillion in December 2020, translating it to a normal increase of 774.28 billion, or a 3.2% month-on-month growth. Now, the increase in gross credit is sequel to a 13.40% growth in aggregate domestic credit as of December 2020, compared with a 9.48% growth recorded in the month of November 2020. The Apex Bank attributes this growth to its policy on loan-to-deposit ratio, LDR, complemented by its interventions in various sectors of the economy. Now, aggregate domestic credits also moved up further by about 13.40% in December, compared with a 9.48% in the previous month. This was largely attributed to the bank's policy on loan-to-deposit ratio, complemented by its interventions in various sectors of the economy. Consequently, banking sector gross credit assets end December 2020 stood at 25.02 trillion naira, compared with 24.25 trillion at the end of November 2020, representing an increase of 774.28 billion. Thousands of restaurants face closure in South Africa franchise body. The Franchise Association of South Africa has warned of untold damages to the restaurant industry as a result of the current lockdown restrictions in place, which includes a ban on the sale of alcohol. FASA has also added its voice, to support the Restaurant Association of South Africa and the Federated Hospitality Association in their objections over the new rules by the newly formed Bargaining Council for the Restaurant Industry and the continued banning of liquor sales, which is crippling the sector. Now, both bodies have threatened legal action against governments over the new rules for the industry, which they claim will be having a devastating impact. Under the new rule, all restaurants and fast food outlets, including those not part of the council, will have to pay wage to all employees that exceed the national minimum wage, and also grant employees wage increase to about 1.5% above inflation. Also, give employees a December bonus as well as weekly payments to clean their uniforms. FASA said that while it is the voluntary representative body of the broader franchise sector in South Africa, representing franchise brands across 14 business sectors, the largest of its franchise sectors is fast food and restaurants, which makes up about 26% of the franchise pie. Now, Akona, FASA's chairperson and chief people and transformation manager at the country's largest fast food chain, KFC, said the many franchise brands have somewhat managed to weather the pandemic and most are in recovery mode. But together with thousands more restaurants, bars and QSRs will face financial ruin should the proposed measures be adopted. Moving on to the parallel market, where Naira gains at black market as external reserves improves on higher oil prices. On January 27, 2021, the exchange rate at the black market, where Forex is traded unofficially, saw an appreciation to about 478 Naira to a dollar. The exchange rate at the parallel market closed at 480 Naira to a dollar on the previous trading day of January 26, 2021, representing a 2 Naira gain. Now, here are some of the reasons why Naira is appreciating. This can actually be attributed to moderate demand for dollars in the face of tight liquidity in the foreign exchange market. Secondly, the CBN has also suggested that the dramatic improvement in the country's external reserve due to an increase in global crude oil prices, and this has increased the capacity of the Apex Bank to intervene in the foreign exchange market. To streamline supply and ensure there is enough to meet rising demand, the CBN ensured strict monetary policy, of course, the control of the Forex market, threatening to expel exporters who refuse to remit foreign exchange proceeds in the NAFEX market. It also warned against paying diaspora remittances in Naira. Now, the CBN may have also confirmed the Forex precious businesses are facing its monetary policy, of course, the communique from January 26, 2020, when it cited it as a reason for the weak purchasing managers index. Now, the weak performance was attributed to the resurgence of the pandemic, foreign exchange pressures, increased cost of production, a general increase in prices, and decline in economic activities. And now to commodities, where gold suffers its worst January performance since 2011 and amid rising US dollar, beg your pardon. Now, the yellow metal is currently under immense pressure on the basis of its, of its low of about $50 in value compared to the last two trading sessions. Now, the precious metal has lost more than 3% this month, its worst January performance since 2011, as global investors weighed on the strong US dollar, prospects for more stimulus programs, and most importantly, the surging viral attacks by COVID-19. Now, the US Federal Reserve Chairman Jerome Powell hinted that the availability of vaccines was grounds for optimism, further saying such could mean a significant improvement for the world's biggest economy later this year. Gold prices have also been under pressure, taking into account the U.S. Federal Reserve left its benchmark interest rate unchanged as expected and stuck with the current pace of bond buying, thereby supporting the dollar and putting bullion on course for the worst start in 10 years. Now let's take you over to stock market, where DF Holdings acquire additional 27.1 million units of ICO shares worth about 30 million naira. DF Holdings Limited, a majority shareholder, has acquired additional 27.17 million units of ICO Insurance PLC shares at 1 naira 10 kobo per share, approximately worth about 30 million naira. And this is according to a notification signed by the company's secretary, Donald Kanu, and sent to the Nigerian Stock Exchange market. In accordance with the NSE policy on insider transactions, DF Holdings, through the disclosure, revealed that a total of 27,174,309 units of ICO shares were purchased at 1 naira 10 kobo, grossing about 29,891,739 naira. Now, consequently, DF Holding has thus announced the purchase of additional 501,777,905 units of ICO shares since the beginning of this year, with about 585.2 million naira spent through the process. The increase in insider transactions indicates growing optimism in the firm's potentials, evident by the recent oversubscription of ICO's rights issued by shareholders. Now, this optimism might be attributable to a lot of factors, including a mix of recent expansion plans and the impressive performance of the firm in its last reported financial statement for the period ended September 2020. Well, thank you so much for watching. Do follow us on social media at TOS TV Network on Facebook, Instagram, and Twitter. Now, you can also like and subscribe to our YouTube channel at TOS TV Network, or you could watch TOS TV via www.tostvnetwork.com. I am Stephanie Odia, and bye for now.